if you're not trading a bounce or breakout, you're not trading anything. There's this expression, BBC, the bounce, the break, and the chase. All right, so I'm a swing trader, and all lazy traders are swing traders. We trade the pullback or indeed a key reversal. And I'm just going to give you a taster of this, actually, with Euro GBP, for example. Let's go to the daily charts. I don't know if I've got any clients in the room now. If I do, please make yourselves known. I did last time. Doesn't matter. But here we go. Here's Euro GBP. All right, so as you can see here, we're in a predominant downward trend. We can see this because objectively we've got the moving averages to the right side of the chart. We've got the 200, the 50, and the 20. And this is our objective measure to qualify a downward trend. If we haven't got what we call order, angle, and separation, when I refer to order, I mean the 20 is below the 50 and the 50 is below the 200. They're angled down for the most part, and they're separated, which gives us a very objective measure that we're in a downward trend here, Euro GBP. And certainly the time of taking this trade here, in July, my apologies, it was in June, we had this bearish pin bar reversal at the top of this rectangular box here. And this is a complex consolidation, or some people might even review it as a retracement. But the fact of the matter is the market's having a breathe in before it breathes out again. So given that we have a rectangular box here, which the market has failed to penetrate, we have a very good heads up that the market's going to go down when it gets to near above this point. Okay, so we've got the level here, which has 3 times out of 4 prevented price from going upwards of any conviction. And now, on the 9th of June, we had our signal to go short. And our signal to go short at the most efficient price point was the bearish pin bar reversal. And all we did for this one was we simply placed an order to go short with our entry just below the low of this bearish pin bar reversal, minus spread, minus additional pip with our stop loss above the high. We had tentatively, I think we had about 75 pips difference between our entry and our stop loss, and we were targeting 275. All right, so 275 divided by, so it's an easy 3.6 to 1. All right, so what we did was that we knew that, okay, we don't trade very often, but when we do, they're generally trades with high profit potential. So if we're wrong, we lose 2%. If we're right, we could potentially make 7%, 7.2%. So this is what happened. We placed our orders to go short, triggered into the trade, and then it went straight to hit target right at the bottom here. A number of our clients took profit there. Some clients decided to hang in there, anticipating the breakout of this level. And it's always nice when you've got an efficient entry in what is essentially a bigger move. We didn't get the close below this horizontal level here. It's quite a significant level in the way, obstructing further euro weakness against the British pound here. All right. And of course, if we do get the break of this level, and we certainly did, all we're waiting for is a retest of this horizontal level. Did we get it? No, we didn't. So we're not interested in this anymore. But we had a great, this was a reversal trade in a downward trend. Okay, so we're simply going with the ebb of the market flow. The great thing about this is we had a bearish pin bar reversal, which is a bearish price action based setup. We had bearish reversal divergence on the RSI. So we had a number of clues in our favor here. And that's important. The more clues we have, the better. And for those of you who are not familiar with bearish reversal divergence, it's a powerful sign that the bulls coming into this level, where prices pushed upwards into this level, are starting to waver and get less and less pronounced. And the bears are coming into the market. It's where price essentially makes a higher high. But when the RSI makes a lower high, like we have here, that's when there's danger on the horizon. And that's great if we've got a bearish outlook for Euro GBP. And that's exactly what happened. It went downwards. So that's Euro GBP. It was a simple sell at the top of the range trade in a predominant downward trend on the daily time frame. And this is as easy as it gets, really. We want the market to come to our level. If it gets to our level, fantastic. That's not the end of the battle. What we want is a price action based setup thereafter. And that's very important. Okay, so that was Euro GBP. I'm going to talk to you about an even easier trade, which was dollar CAD. And we traded this one on the weekly. I know to a lot of people who are relatively new to financial markets, trading the weekly does seem like the kind of time frame which you could quite happily or unhappily grow old trading. But actually, if I talk to you about this particular setup, you'll see exactly what the profit potential could be on the weekly. And it really is no idle time frame. If you get an efficient entry, and I'll discuss exactly what you can do to get an efficient entry on the weekly, then you'll have no problems, providing you get your entry correct. So looking at this, I think it's safe to say on the weekly that dollar CAD is in an upward trend. We've got key higher highs and higher lows. We've got the 20 moving average above the 50 and the 50 moving average above the 200. Nothing really terribly complicated about that. I would like to reiterate that moving averages are very objective and a way of assessing whether the market is indeed trending and the speed and the momentum of the trends. Like I said to you before, the flip side of the coin with our Euro GBP short, in stark contrast, we've got the separation, we've got angle, and we've got the order as well. Okay, so when the market pulled back to this bullish pin bar reversal here, you can see here you might see it as a morning star, for example, or indeed a hammer, whatever you call it. It's exactly the same thing. Some of you might even know it as a low test. The key thing is we've got a tail, and the opening close is in the top half, or ideally the top third of the bar. Okay, and that's the key thing. At the time of taking the trade, we had a higher low on the hourly time frame. Dare I go back to all the way back then? Let's have a look. Sorry, it was a head and shoulders. My apologies. We had a head and shoulders on the weekly then. So you can see left-hand shoulder, head, right-hand shoulder, which was correlated very nicely with our bullish sentiments on the weekly. Like I mentioned to you before, we might have a bullish pin bar reversal on the weekly, but what are the shorter term bars and sellers saying as well? The fact of the matter is if you think of a machine with the smaller cogs turning the bigger wheels, it's very much like this with trading. And what we need to close the daily is, of course, 24 hourly bars. And of course, to close a weekly bar, we need 5 days. And so that's why we do pay very close attention to what the smaller, shorter term bars and sellers are doing. Okay, so what we did in this instance was, okay, we saw great upward trend. It's simply buying the dip in an upward trend. There's nothing alarmingly complicated about doing this, but it's amazing how many people try and overcomplicate the issue, all right? And it's human mentality, human nature to do that. To make more money from trading, your strategy needs to be more complicated. No, that's nonsense. Don't worry about that at all. What I'm teaching you here is as old as the hills, and it hasn't lost any of its raison d'etre for being as old as the hills, okay? So here we go. We wanted an efficient entry for this because, of course, if we look at the upside, if we were to take the break of the high here with our stop loss below the low, we haven't really got much of a profit potential, barely a 1-to-1. So what we did was we saw, okay, the week in which we took the trade, we thought, okay, we're going to place our entry above the high of the setup week. Let me zoom in for you with that bullish pin bar reversal here, and we placed our stop loss below the low of the week which took out the high. So we've essentially half the distance between our entry and our stop loss. So we've turned a 1.5-to-1 trade, taking the conventional entry into a 3-to-1 trade. And that's the beauty of getting a tight entry, and that's what we did. Okay, and then what happened was a number of our clients decided to scale out of the position here. We've hit this strong level of resistance. If we're trading a trend-based strategy, typically the previous swing high, if we're going long, acts as quite a meaningful level of resistance, obstructing price from getting new highs. If it gains a new high, then that's quite a big event. But it does make sense to, on one hand, bank profit, but on the other hand, keep yourself in the game, because it would be an absolute shame if you're just simply going to cut a winner short very quickly. And there's this whole adage, let your profits run, cut your losses, for example.